Good afternoon. Let's do some business. In fact, we're going to be doing it live right now, doing more at 4 weekday afternoons. We get right down to business here with the news-driven hour right after Ben Shapiro. And just before the 790 KABC News Blitz with Randy Wang at 5. Mottek On Money, live on the air on 790 KABC, streaming live online worldwide at KBC.com, and the on-demand Mottek On Money podcast, KBC.com, Apple, iTunes, and all of your favorite podcast platforms. Stocks edging higher on the second trading day of the month of October and fourth quarter of 2024. All three of the major averages did finish slightly higher after taking in the possibility of renewed inflation given the upheaval in the Middle East with Iran attacking Israel with a missile barrage. Also, the dock workers strike back east, adding to concerns about higher inflation and shortages of some items possible. Investors also took in the vice presidential debate last night. The Dow came in for a closing gain of just about 40 points to settle at 42,197, ending higher for the eighth time in the past 10 trading sessions. Both the Dow and S&P 500 hit record highs last month. The S&P 500 did close higher by less than a point today to 5,709, and the NASDAQ ended higher by just about 15 points. Gold moved up nearly $10 today to $2,679.30 an ounce. Silver also higher to $32.13 an ounce. Digital gold, as it's known, crypto, mixed with Bitcoin up about 600 to just shy of 61,000. Ethereum slipping back below 2,400. Price of oil settling at a two-week high today as Israel's response is being awaited to the missile barrage launched by Iran yesterday. Later this hour, I will discuss the very latest on Iran's missile attack on Israel and the very latest in the Middle East, with the one-year anniversary of the terror attack by Hamas on Israel last October 7th coming up, and the Jewish New Year, Rosh Hashanah, set to begin at sundown this evening. I'll be joined later this hour by Rabbi Abraham Cooper, Associate Dean and Director of Global Social Action at the Simon Wiesenthal Center in West Los Angeles and the Museum of Tolerance. Big strike back east, strike by 45,000 dock workers, halting shipments at U.S. East Coast and Gulf Coast ports. Now in its second day today, no negotiations currently scheduled between the two sides. According to Reuters, the lack of progress raising concerns now among those reliant on shipments that the disruption could be prolonged. The International Longshoremen's Association, ILA as it's known, union strike has blocked goods from food to car shipments across dozens of ports from Maine to Texas, which analysts warn will cost the economy possibly billions of dollars each day. Dock workers and longshoremen on East Coast ports are on strike in this major labor action with real consequences for the U.S. as well as the international economy. I'll discuss the potential impact here on Southern California's economy and our local ports, where things are expected to get quite busy soon as cargo is diverted to the ports of L.A. and Long Beach. I'll discuss that and more in the local business scene with Mark WILBUR, Chairman of Employers Group, former chair and founding member of the L.A. BizFed, and former Associate Dean of the USC Marshall School of Business. But first, on your money, the markets, the economy, and the whole works now. Joining us live, Jim HAUSBERG, Managing Director at Hightower Advisors, the HAUSBERG Group in Beverly Hills. Jim, thank you very much for coming to the line this afternoon.
My pleasure to be with you, Frank, and all your listeners. Another incredible quarter. Thing I liked about it most, it broadened out. It wasn't just technology, as we know. We saw gold move up quite a bit. We saw equally weighted S&P stocks. We saw small cap move, emerging markets, Europe markets, all very strong. And the S&P also up 5.25 was a good move, and is now up 20% for the year, and backing up last year's 24%, 25% increase. So the bull market continues with all the things that you just mentioned. Now we've got the longshoremen strike, the issues in the Middle East, the election, interest rates, China stimulus. People want to own stocks, Frank, on any sort of pullback or some sort of correction. There are buyers out there, and we're seeing it again today.
Proverbial wall of worry certainly being climbed here, Jim, with all of the things on the table here at the moment. What do you see ahead here? We even saw volatility ease today, despite the upheaval in the Middle East. Down, the VIX index was down 2%. Where do you see this thing go from here?
Well, if you're looking at the markets, it's telling you that these events around the globe are not bothering investors just yet. I would think if things continue to accelerate there and certain things are bombed, talk about the Iranian nuclear facilities, or some of their oil, refineries. That could spike oil up quite a bit, and that could create some more volatility, as we saw 2 days ago with the uncertainty as to what Iran may do. So I don't think we're out of the woods yet there. The volatility will continue. We had the debate last night. People are trying to figure out, how to play the market with that. But the fact just remains is that stocks are doing well. Earnings are the real driver, and I think earnings are going to be higher in 25 than they were in 24. And I think that's another reason why markets are moving up. And by the way, as I was saying before, it's not just the Magnificent Seven. So when you go into the end of the second quarter of this year, the Mag 7 is up 35%. The S&P was up 15%. So you can see what those big stocks have done. Equally weighted, the market was up about 4 to 5%. As we end the third quarter, equally weighted up 13%. The Mag 7 is actually flat in the third quarter. So this is what I was talking about, the broadening out of the other averages, the other 11 sectors besides technology. So REITs are benefiting from lower rates, and banks are benefiting from it, and small cap as well. So the balanced portfolio is working, and you're still getting good returns in bonds. Treasuries are probably coming down 4% right now, 4.5%, but you're able to buy some bond and bond funds in the 5 to 6 range. So the combination of the two is really working, Frank, and our clients are very happy.
Delighted to hear that. On the air live with Jim HAUSBERG, and mentioned the Mag 7. Let's talk about NVIDIA, which moved higher today, and looks like Apple also at or near its all-time high here. What about those two?
Well, the OpenAI story of the money that they're raising is huge. $6-7 billion, maybe it's 10, 11. NVIDIA probably is the biggest winner there, along with Broadcom and some others who sell the chips into that space. But all these data centers that they're going to be building are going to, be taking on all this product, all about AI. And I think it's a lot more than hype. I would say that the valuations are pretty lofty. The returns on stocks in the space have moved up quite a bit. But it's here to stay. It's real. It's computer learning, and things are changing out there. We thought the internet was a big change 24 years ago or 25. AI is even bigger.
Turning to the banking stocks, look like Bank of America stock moved slightly higher today, despite the big news you probably heard during the day that an outage at B of A left some of the bank's customers unable to access their accounts, while others saw what they said were erroneous balances of zero. According to many reports on the news today and on social media websites, including Down Detector, showed that complaints about outages started arriving at around noon Eastern time, and about an hour and a half, the site had received nearly 20,000 reports. What about the bank stocks here?
Well, hopefully those numbers aren't real. I mean, it's always a fear I have, and it's interesting
you imagine
you say that because I think October is supposed to be Cybersecurity Month, if I'm not mistaken. So obviously people are always going to be focused on that. We had a outage with Verizon the other day. These things happen, but I have confidence in the system. The bank stocks are cheap on a multiple basis. A lot of them pay a nice dividend, which I like the dividend-paying stocks. So Goldman Sachs, J.P. Morgan are probably two of the highest quality ones you could own. Aflac, I think, hit a new high today. Berkshire, obviously owning all these various insurance companies, Geico in particular, all trading very, very well. So value, as opposed to growth, has had a bigger move in this third quarter. But the combination of the two still seems to make a lot of sense to me, and that's why we own both value and growth, both small and large, and emerging markets and international markets as well.
Given the drama now with the port strike, what about the shipping companies and looks like air cargo companies seem to be set to benefit from what's happening? And, of course, retailers might be impacted by all this. What do you see ahead in the face of this big strike here?
Well, this big strike, if it lasts for a couple of weeks, is going to have a real impact on the economy. And so the hope is that doesn't happen. I think playing other areas like air freight and things like that may be a good trade. Obviously, it's not all the ports, so a lot of things are being pushed out west. So it's probably good for San Pedro and Long Beach. But look, these workers haven't seen raises to equal. I mean, the biggest problem for all these 50,000 is the higher inflation rate. And these folks make 25 to $35, and those that have been around longer, $40 an hour, and they want a $5 an hour increase for the next 7 years. And we'll see what happens with these ports and how they figure this out. But it's a huge part of the economy, and this could end up being $5-10 billion in loss over the next several weeks unless they come to an agreement. And the president can come in due to the Taft-Hartley Act, as you know, and stop this, but he doesn't want to do that for multiple reasons. So we don't have to get into that. But it's a real problem, and let's just hopefully the negotiators can come together and open up these ports again, because there's going to be a lot of hurt out there. Walmart is probably the biggest one, and Lowe's and all these other retailers could be a big issue if we can't get those ports reopened.
All right. Here we are, October 2nd already, holiday season right around the corner, and with this port strike, new attention is focused certainly on the retailers and the dollar stores, and we saw the 99 cents only stores go out of business this year because nothing's 99 cents only anymore, of course, and that was probably one of the main reasons. But given the choice from the low end to the middle range retailers and the high end, where would you be placing your bets as we get into the holiday season?
Well, I mean, there's a wide range of retailers. There's obviously some that have had real issues, but when you look at consumer discretionary, there's one name that stands out, and that's Amazon. That sector is up 26% over the last 12 months, year to date up around 12.5%. Costco has been a great stock to own for years. Walmart's done very well this year. Target's had his moments, but Dick's Sporting Goods is a great company in the sporting good world. So I think the retailers can do well. It's not an area we spend a lot of time on. A lot of the managers that we use don't own many retail. But it's certainly out of favor in some areas, and probably worth a look-see. It's similar to what I said about China a little over a week ago, and I got lucky on that call. But we'll take it, right?
Absolutely. On your line with Jim HAUSBERG, and I know you don't have the laser eyes on, but certainly you do pay attention to what's happening in the crypto space with Bitcoin bouncing all over the place, and it's taken a hit in the last day or two. Bitcoin right now just below 61K and Ethereum back below 2,400. What are your thoughts about what's happening there?
I'd buy gold, Frank.
Stick with real gold.
Stick with the hard asset, yeah. I say it every time I'm on with you. I can't figure out what it's worth. Some people think it's a Ponzi scheme. I won't say that. Others say, it's about the future. You put it in your portfolio and you put it away. Try not to trade it, because if you do own it, you can just get whipsawed. I mean, 10, 20% moves in a day can happen there. So I don't think people really can figure it out. There's all this stuff that it's all black market and, bad folks, playing around in there. But I just don't put it as something that, I would invest in for clients. I can't figure out what it's worth. Not that we can always figure out what all these things are worth, but there are no earnings. It's just an asset that people have jumped on. And to me, it's a little bit of the greater fool theory. So good luck to those who are invested in it. It's certainly done well over the last couple of years. In fact, it's done well since it was issued when it was, what is it, $20, $30 for Bitcoin. Now it's 60,000. So for those who have held on for a long period of time, it's done pretty well. But for those who bought it and sold it, it went down from 50, 60 down to 15, and now back up again. So volatility is a big part of Bitcoin. You have to be comfortable sitting with it.
All right. Given what's happened in recent years, some folks were questioning whether the 60-40 portfolio was still a wise strategy, 60% in stocks, 40% in bonds. What are your thoughts about that one?
Well, I think it's good right now. The biggest problem with 60-40 was that rates went to zero during the pandemic. So if you were, buying longer-term bonds, then, you're getting half of 1%, 1% if you were a buyer. If you were selling bonds, it was a great time. I remember Apple sold bonds at half of 1%. Google sold bonds at, 3/4 of 1% for, 10, 15-year periods of time, or maybe slightly less. But today you can get, in treasuries still in the high threes. Rates are going to come down, so you might see that come in a little bit. Corporate bonds, 4.5%, 5%, high yield in the 7 to 8 range. And equities have done 14% over the last 5 years. The historic numbers, as you know, are closer to 10, 11. So I think the combination of the two works. And if people can earn 7 to 8% with a balanced portfolio, it should hold in there in some down periods, like we saw in 22. So yeah, I think it's alive and well, and I would continue to recommend it.
All right, one thing that didn't work this year was sell in May and go away. Those who hung in there did pretty well this year, with the market hitting record highs last month in September. And there's another trading folklore here that we have to mention during this time of the year, and that you probably have heard it, Jim, sell Rosh Hashanah, buy Yom Kippur. We see Rosh Hashanah set to start at sundown tonight. Yom Kippur begins on Friday, October 11th. What do you think of this concept here?
I don't know how far it's going to take, but I've heard it my whole career. So a happy and healthy New Year to everybody listening. Hopefully it'll be a good year. But, yeah, that old adage, I'll tell you an adage that's sort of interesting, Frank, is that the fourth quarter in election years is usually the fourth quarter is usually the best quarter for the markets going back to the 50s. But during election years, it's not up nearly as much as it is in other years. So normally the market is average about a 4% gain in the fourth quarter. Election years 2.5%. So I don't want to throw water on this market, but based on history, it may not be the best fourth quarter we've seen. So at least there's some facts behind that one versus the buy on Rosh Hashanah, sell on Yom Kippur.
Wonderful.
Maybe that works.
Wonderful, Jim. Well, thank you very much for coming to the line here. We wish you a happy and healthy new year, and peace to everyone. And thank you very much for joining us live here this afternoon.
My pleasure, Frank. It's always great to be on with you.
Likewise, Jim. Thank you very much. That is Jim HAUSBERG with Hightower Advisors, the HAUSBERG Group in Beverly Hills, live with us here on Mottek On Money on 790 KBC. Hello again, friends. Did you know that for more than 10,000 years, gold has been the greatest store of value and considered a safe haven asset to preserve your wealth? Well, now with the U.S. debt at more than $35 trillion and climbing, not to mention the Biden administration getting us involved in costly wars, developing the digital dollar, central bank digital currency, and inflation spiraling, it's critical now than ever before to safeguard your assets, like your cash and other assets, and your savings retirement accounts. Do so with physical gold. Opening a gold IRA is one of the best ways to secure your wealth and create a stable financial future for you and your family. Stop worrying about your retirement and the market and cash savings in the bank. Feel confident, prepared, and in control with real physical gold and silver. Give Joe Morgan a call at 1-800-753-8534 today, and he'll be happy to answer any questions you have. Again, that's 1-800-753-8534, or visit UnitedGoldGroup.com. Mottek On Money continues here in 790 KBC. Nervous day in the markets today, given what's happening in the Middle East, as well as the port strike back east. Price of oil did settle higher today, at the highest we've seen in a couple of weeks, extending a rally from a day earlier as investors awaited Israel's response to the massive missile barrage by Iran on Israel, which stoked fears of wider conflict that could impede the flows of crude oil from the Middle East. The price of oil moving higher today, right now just below $71 a barrel in New York. Taking a look at the markets today, the Dow closed higher by 39 points at 42,196. The S&P 500 gained 1 point at 5709. The Nasdaq at 17,925. The volatility index, the VIX index, pulled back 2% today after spiking yesterday. The yield in the 10-year note, which impacts the fixed-rate mortgage rates, now at 3.79%. Tomorrow we'll be getting new readings on jobs, the weekly jobless claims, and on Friday we'll be getting the big enchilada, the monthly economic reports, and that'll be the monthly jobs report from the Labor Department. NVIDIA shares moving higher today by nearly $2, back to just shy of $119. Apple at or near an all-time high today at 57 cents at $226 and change. Bank of America stock moving up 1 cent today at $39.23. Bank of America customers dealt with a headache today. Some of them saw their balances at zero when they checked in their accounts. According to various reports today, an outage at B of A left some of the bank's customers unable to access their accounts. Others saw what they said were erroneous balances of zero in some cases. Berkshire Hathaway Class A shares, the most expensive on the New York Stock Exchange. That's the Warren Buffett company, moved down more than $500 today at $685,000. The Class B shares pulling back 63 cents at $4.56 and change. Donald Trump Media shares, DJT, pulling back 35 cents today at $15.81 a share. The price of gold moving higher moving up about $10. Right now, $2,679.30 an ounce. So-called digital gold, Bitcoin, and the other cryptos here. Right now, Bitcoin up about 600 at 60,825. Ethereum down 5 at 2,381. And Doge at the moment at 11 cents. And now the latest news here on 790 KABC. Mottek On Money continues here in 790 KABC. Multi-billion-dollar impact on the economy on a daily basis because of this big strike that just started yesterday, a strike by 45,000 dock workers halting shipments at U.S. East Coast and Gulf Coast ports. Now in its second day today, no new negotiation scheduled between the two sides. The strike is affecting 36 ports back east and the first by the Longshoremen's Union since 1977. Lack of progress raising concerns among those relying on shipments that the disruption could last a while. The International Longshoremen's Association union strike blocking goods from food to car parts and vehicles themselves across dozens of ports from Maine to Texas. President Biden has said he will not intervene to force striking ILA union workers back on the job at the East Coast and Gulf Coast ports. Biden and top administration officials, including the Transportation Secretary Pete Buttigieg and the Acting Secretary of Labor Julie Su, have focused attention on the ocean carriers and what they say are price gouging since the strike began. If the union prevails, according to CNBC, in its battle for a large wage increase, there's the risk of a resumption of wage inflation that could upset the Fed's so far successful efforts to tame inflation and get that economic soft landing, though recent Fed concern is focused more on a potential labor slowdown than boom conditions. So Fed also paying attention to what's happening. We'll be paying attention to the jobs report that will be coming out on Friday as well. And now we have this big strike in the mix. Local ports, meanwhile, here in Southern California, preparing for more products to be diverted here because of the work stoppage. Joining us live now to talk business some more is Mark Wilbur, who is the chairman of Employers Group, former chair and founding member of Los Angeles Business Federation, and former associate dean of the USC Marshall School of Business. Mark Wilbur, thank you very much for coming to the line. And what's your reaction to this big news here?
Oh, thanks for having me on, Frank. It's always great to be on. Well, it's interesting, out here in Los Angeles, you sort of, what is going to happen, right? Because the strike stretches from Maine to Texas, but, our ports were handled last year in their processes of getting a new contract. So, it's one of those things where if this only goes for a week, maybe even 2 weeks, probably not much of an impact. It might hurt the nation's economy a bit. No question about that. I've seen estimates as much as $4 to $7 billion a day. It's like all economists, though, if you line them all up, you can't get to a conclusion, right? So, I've seen numbers all over the place on this already. But, the truth is, out here in Los Angeles, we've already seen a massive increase. A lot of the big companies predicted that this might be happening heading into, the vital Christmas season. So if you're a big company, you probably already have adjusted some inventories and already have some plans underway to deal with this. I'm more worried about the small, medium-sized companies, Frank. Those are the ones that, they don't have the ability to manage their inventory as easily as the big companies do. You can even, shift some inventories in between stores from west to east and things like that. Just keep in mind, every time you move something, it costs money. So every time, I've heard people say, oh, well, they can just ship around the corner, to the West Coast. I'm like, well, that actually takes a few weeks and it costs a lot of money to do that. So I'm more worried about it stoking a little bit more on the inflation front as well. So these are some of the things that are crossing my mind as we're dealing with this.
It's been a while since we chatted about the supply chain and just-in-time inventory and all that. These were big issues, of course, during the pandemic, and we had that huge backup here off the West Coast, and now we might see certainly more traffic here at our ports. That's the expectation. As you mentioned, things that need to get in will be coming in this way, at least for the time being, potentially increasing business here at the ports of L.A. and Long Beach, and this is something that the port director in L.A., Gene Soroka, has already talked about. So and hopefully we'll get a chance to get him on this program as well to talk about it. But supply chain and that just-in-time inventory. A lot of retailers, of course, with the holidays approaching rely on that just-in-time inventory.
Well, it's funny you mentioned that, Frank. Traditionally, the last 20 years, companies have been penalized for carrying too much inventory. There's that carrying cost and things like that, and stock prices can actually get hit when you're carrying too much inventory. But for the ones that did actually bulk up a little bit on their inventory, it's probably going to save the day for them, especially if they're impacted directly from the East Coast or Gulf Coast ports. I thought it was interesting. I heard you mentioned Gene. He'd be great to have on your show. They had the greatest third quarter, the highest movement of goods in the history of our port, right, which I thought was interesting. I just found that out the other day. Prior to the strikes, I just, randomly came across that. So I think they could actually handle an increase. I don't think it would bury our ports. I think they could actually handle some kind of an increase. But, it depends on how long this goes on. A couple of weeks, probably not a big deal. A couple months, a bigger deal.
Certainly. It should also be noted, remind the folks that Los Angeles is the largest manufacturing region in the United States by far. So, so good thing our ports are still operating here full steam ahead at the moment.
Yeah, people don't know that about manufacturing. When you ask, what area of the country is the largest area in manufacturing, people will guess a lot of other places in the country based on movies or things that they've seen. But the truth is, it's right here in Los Angeles. Absolutely.
And you can see it when you fly over. When you head into LAX, you see all those warehouses below there in the Inland Empire, and that's all representative of the tremendous manufacturing base that we have here. So manufacturing does get overlooked, but we certainly celebrate manufacturing, and obviously with our biggest port complex in the country here too, we are big time here for the nation's economy and indeed the global economy. And you, of course, also watch the job picture very closely. We're going to get a new jobs report here on Friday. The Fed will be paying attention to that on signs of weakening in the job market lately. What's your gut feeling about what we might come up with here on Friday, and what's the buzz about the local job scene here?
It'll be interesting. Whether it's going to weaken or stay pat. It's a 50-50 call. To be honest, Frank, it's going to be tight. I don't think you're going to see any major job growth. I don't think that's going to happen because you're coming out of the summer season and things like that. It's funny you mentioned jobs, though, because, one of the biggest issues on that strike on the East Coast is one of the things they couldn't come to agreement on is job protection with automation. So, in other words, sure, you can go ahead and automate, but you can't lose any jobs in the process. So they're asking for a 77% wage increase, but don't touch our jobs with automation. That would be like all these fast food restaurants that were forced, $20, $25 an hour and not be allowed to put in kiosks or anything in those restaurants to streamline their business at all. So, some of it doesn't really make a lot of sense. And some of it you can understand why the ports are pushing back, saying, hey, if I can't automate, how can I stay in business?
Of course, other ports around the world have automated. The union demanding a total ban on the automation of cranes, gates, and moving containers and the loading and unloading of freight, along with significantly higher wages. So looks like they've locked horns on all of these big issues. So you're absolutely right to highlight that. And of course, if this thing drags out, it'll impact the jobs numbers, which the Fed pays attention to. I guess on Friday, the analysts believe the unemployment rate in September will likely hold at 4.2%, and we'll get the news at 5:30 in the morning on Friday, our time here. And some expect a slight uptick, but obviously that number is taking on new importance given the Fed's plans to lower interest rates. So we're going to be watching that one very, very closely. That's what we call it, the big enchilada of monthly economic reports. That's the jobs report from the Labor Department.
Yeah, well, of course it's the big enchilada. We had Taco Tuesday yesterday, so let's call it the big enchilada Friday.
Absolutely. Absolutely. Well, we'll be tuning in for that and look forward to having you on again here, Mark. So thank you very much. We'll be watching all these developments very, very closely, along with all the geopolitical developments here. And A lot of nervous time in the financial markets given what's on the table here at the moment. Mark, thank you very much for coming to the line here this afternoon.
You bet. Thanks for having me on, Frank. Always a pleasure.
Likewise. Thank you very much. That is Mark WILBUR, chairman of Employers Group based here in Los Angeles, former chair and founding member of the LA BizFed and former associate dean of the USC Marshall School of Business. Out to the freeways now on 790 KBC. Mottek On Money continues here in 790 KBC. Tensions running extremely high in the Middle East. Israel says 8 troops died in combat in Lebanon, where soldiers engaged in close fighting with Hezbollah militants, and signaled Israel would retaliate for Iran's ballistic missile attack. Yesterday, Israeli authorities released an initial assessment of the damage caused by at least 180 missiles launched by Iran, reporting minor damage to dozens of homes and other civilian infrastructure in Israel, as well as a few military bases. The U.S. urging Israel to limit its response to Iran's attack, countering the calls by some current and former Israeli officials for an aggressive retaliation under the circumstances. Hamas's military wing, meanwhile, claiming responsibility for the killing of 7 Israelis in a Tuesday terror attack in Jaffa, according to the Wall Street Journal. Israeli Prime Minister Benjamin Netanyahu meeting with the country's military and security leaders again today. Iran said its missile attack was retaliation for the deaths of senior leaders of its allied militias Hezbollah and Hamas. All of this as the Israel-Hamas war continues, with the one-year anniversary of the terror attack by Hamas on Israel last October 7th coming up, and the Jewish New Year, Rosh Hashanah, set to begin at sundown this evening. Joining us live now is Rabbi Abraham Cooper, Associate Dean and Director of Global Social Action at the Simon Wiesenthal Center in West Los Angeles and the Museum of Tolerance. Rabbi Cooper, thank you very much for coming to the line and give us your reaction to the latest news this week.
Well, it's kind of overwhelming. I think the first thing that comes to mind is that if not for Israel's amazing technology and its close relationship with the United States, we probably would be close to a World War III, and the entire region would have been in flames. The fact that you can talk about the morning after 181 ballistic missiles are aimed at a single country the size of New Jersey, and not a single person was killed, is quite remarkable. But in a sense, it also masks the fact that the Iranian war against Israel's existence now is right out in the open. Of course, they've had a setback with the terrorist lackeys in Hezbollah. Hamas is degraded, yet you still have 100 hostages being held. So it's the technology and I think the iron will and faith of the people of Israel that enables us to sort of reflect another day after. And in my case, with 8 grandchildren in Jerusalem and, families taking their kids and their elders down into a safe location in Jerusalem, Tel Aviv, and around the country last night. It's also intensely personal. I think another question for the American Jewish community is trying to get a sense of where President Biden actually, what is his policy when it comes to Iran? All we hear is what Israel shouldn't be doing, but the question is, what signals are they sending to the Ayatollah in Tehran? If the Iranians think they can get away continuing on this path, they'll continue to do so as they inch their way towards nuclearization. So it's a very difficult time when you talk about 7 Israelis, who were killed in a terror attack. They were on a light rail in the city of Jaffa. A young mother and others just gunned down by 2 Palestinian terrorists just about the time that Israeli civil defense announced that everyone needs to get close, because missiles are about to come in. So it's a country under siege. It's a people that's still standing tall and grateful for the support of most people here in the United States. But I think confused signals from the administration to Tehran about where that red line is. Words alone are not going to cut it. And it looks like the Ayatollah continues to just ratchet it up as long as that it's Palestinians, it's Lebanese, it's Iraqis, it's anyone else who's paying the price but his own people, his own inner circle.
On the air live with Rabbi Abraham Cooper at the Simon Wiesenthal Center in West Los Angeles. And as you properly noted, Rabbi Cooper, last time we spoke, Israel has been under attack with rockets and That's one reason why Israel took the action to go into Lebanon, and of course continuing the action against Hamas, right? And now the expectation is that Israel will retaliate in some fashion here against this tremendous barrage. What news are you getting from Israel at the moment, and any other news that you could share with us here that's happening right now?
Well, I think maybe 2 points. Number one is that what's going on in Lebanon now just proves that the United Nations is almost irrelevant. They had a resolution years ago that Hezbollah couldn't come near the border, and now the Israelis have to go into tunnel systems that are much more sophisticated than Hamas, with terrorists still armed to the teeth. The United Nations and all these resolutions, even in the Security Council, when it came to living up to any of their red lines vis-a-vis Hezbollah or the Iranians, essentially non-existent. So it's left to the Israelis, Israeli civilians, ultimately military, to try its best to push back. And insofar as how they'll hit Iran, I just, your guess is as good as mine other than to say, considering what the Israelis have come up with in the last couple of weeks, combining technology, military might, and pinpoint targeting, if I was the Ayatollah, I'd be sleeping in different places every night. And I know that there are millions of Iranians inside Iran and many, many people here in Southern California who hope and pray for the day that that regime will be put out of business. So it's a toss-up. It is an extremely difficult time for the people of Israel and for the Jewish community here in Southern California and around the world. One thing for sure, Frank, you can go into any synagogue or temple the next 2 days. Jews will not have any problem focusing their prayers on behalf of their families, their loved ones, their community, their nation, their neighbors. It's a time where our faith and determination is being tested. I'm a believer, so there will be a day after, and hopefully it will be not only good for Israelis, but I think, again, the whole Abraham Accords notion, the blossoming of normalcy and peace in the Middle East, in my humble opinion, is still very much a possibility. I hope in a small way to continue to be a tiny part of that process going forward.
Rabbi, I wish you a happy, healthy, and peaceful New Year, and thank you very much for this honor of speaking with you here this afternoon. That is Rabbi Abraham Cooper, Associate Dean at the Simon Wiesenthal Center in West Los Angeles and Museum of Tolerance, live with us here on Mottek On Money on 790 KBC.
Every week, Michael Rosenbaum is getting deep with someone new on the Inside of You podcast. Actor James Marsters.
Are you somewhat content? Do you still stress a lot?
If anything, I feel guilty that I have it so good. If you make the decision to be an actor, the deal is poverty. I don't understand. How did I get here? And the answer, how did I get here, is really one audition one day for Buffy the Vampire Slayer.
Inside of You with Michael Rosenbaum, wherever you listen.